Hi guys, it's Thomas here from COTBase.com. Welcome to this week's Commitments of Traders review. Today we're going to have a look at the 28th COT report in 2015, and as usual we're going to start off with the changes in commercials positions. Here we go. Let's start off with sugar, where we have a 41% change in commercials positions, 28 in large speculators and 38 in small speculators. These changes are large, especially in case of commercials. You may see that it's amongst the largest changes in the past 52 weeks range. It is of course a bearish COT change signal, may be coming a bit late if you look at the chart. Here we've got Friday, Thursday, Wednesday, and basically on Tuesday, just at the right point it came out. But of course we get to know about the data only on Friday, so it may have been a little bit late. But anyhow, this bit of a decline can of course continue in the next couple of days as well. But let's have a look at the 5-year chart and see how extreme this market has become. As you may see, we are moving away from bullish extreme levels. Bullish extreme levels that, as you can see in the past, have successfully stopped these declines. Now of course, on the long chart, on this longer 5-year chart, you may see that sugar is still in a downtrend, and big question whether we're going to see any higher prices from here on, or it's just going to be repeating itself. As you may see in the past roughly 1 year, it's been doing that. We get a larger bullish extreme and then a bit of a rise, but it's not too long, and then we go back into decline mode. So anyhow, don't forget that we had this extreme, and the possibility is there that its prices are going to go further higher. Big question is if it's going to happen now. Next market, corn, a 19% change over there in commercials position, 14 in large speculators. You can see the change size over here. We had larger changes, as you may see. And of course, you can also witness that it wasn't a successful COT change signal. Prices started dropping only 2 weeks later. So I wouldn't put too much effort into that. Let's move on to the 5-year chart and see the extreme situation. And we're not surprised to see prices going much higher after having this relatively large COT extreme in the market a few reports ago. Question, are we at a bearish extreme? Well, you may have a look at the past 2 occasions when the extreme was similarly large in this direction, and you can see that it managed to stop the rally. So this may happen again. Keep that in mind if you're going long, or in any direction actually. And of course, by looking at this 5-year chart, you may see how large the bearish extreme can get, and we're still about, well, more than 200,000 contracts away from those levels in case of commercials, and of course in the case of large speculators also. Okay, rough rice, our next market, with also 19% change in commercials position. Here's the change, again bearish. Maybe the timing is a bit better here, but jumping to the 5-year chart, we can see that we have a more or less similar picture than as in corn. So we had this bullish extreme, which was actually present for many months before, and didn't really have a significant effect on price. But now we do see a little bit of rise there, and this may continue in the near future as well, of course. Moving on to large speculator COT extreme, we can see that we've still got New Zealand dollar and Mexican peso on top of the list with all-time COT extremes. Of course, not surprisingly, prices are still declining pretty heavily actually. And let's have a look at the 5-year chart. Here we go. You can see as prices are declining dramatically, the extreme of course is widening as well. So this is just, I would say it's just a normal situation we have, and it's hard to tell from here when the decline is going to stop. I'm just saying that the extreme is present, the stress level is huge in this market, and we should be expecting this trend to change eventually. Of course, we may need to wait a little bit longer for that to happen. Mexican peso, I think it's all the same here. Let's jump to the 5-year chart. Here we go. And you may see that the extreme is widening. Maybe the dynamics of the decline is not as we saw in the New Zealand dollar, but nevertheless, it's still declining. We see lower and lower prices coming as the extreme is widening, of course. So that's quite normal as well. So we still need to be patient here as well. Soybean meal, our next and last market for the review, with 158 report extreme in large speculators. We have 165 report extreme in commercials. You may see it over here. The last time we had such a level was back here in 2012. And you can also see that this bearish COT extreme was very, very short-living. Prices managed to skyrocket higher from there. So keep in mind, of course, that these COT extremes may, from time to time, be a little bit ahead of their effect on price, because eventually soybean meal did start declining, but it was a few reports after we had this large all-time COT extreme. All-time? I'm not sure about that. Let's have a look at the 15-year chart. Here we go. Yeah, it was all-time there. So we're getting closer to these all-time COT extreme levels, which of course can be breached, and we may see even greater extremes to come. So this rally that we're experiencing right now, of course, may easily continue for another few weeks, month even, before we see the end of it. Okay, that will be all for this review. If you would like to have a look at other COT charts, you can do so at our COT charts page. If you would like to have more in-depth and detailed COT analysis, then of course the page we're looking at is giving you this solution. I hope you enjoyed my review, and I hope to see you next week. Have a great weekend. Take care. Bye-bye.